Good day, Tea with Travis. Today is Tuesday, January 6th, and boy, the market looks nice this morning. If you watched my update last week on Friday, I talked about how there was some emotional purchasing going on across the board in all stocks and was pulling money out of bonds. But the positive thing there was there's a long-term upward trending line. Basically, they call it an up escalator, meaning most the rates have been in a trend where they're continuing to improve. And when I say up, the value of mortgage bonds when they go up actually means the rates are lower. So the more valuable mortgage bonds are, the higher price they are, the lower the rate is offered to us on a consumer level. So the good news is that that loss we saw on Wednesday last week on a short trading day on New Year's Eve, and then even on a Friday, the first day trading day of the new year, we saw money pulled out of bonds and put into stocks because of the flurry of activity there. But today and yesterday, the Feds are now pushing in their money into the mortgage-backed security environment, and at a rate of about $4 billion a day. They have $500 billion to spend between now and June 30th on mortgage-backed securities, and if they average those over that period of time, I think there's 120 trading days or so between now and June 30th, that is $4 billion a day. And not necessarily will they buy $4 billion a day, but if they skip a few days, that means they're going to buy $12 billion on the third day. So the numbers are just astonishing how much they're purchasing, and because of that, that has caused mortgage-backed securities to be quite the valuable commodity right now. And there's really, I don't see how technical factors are going to push mortgage-backed securities down anytime soon. Even with the unrest in the Middle East with Palestine and Israel, and oil prices climbing in recent days, it's down a little bit today, fortunately. But even with if that escalates, and God forbid it does, but if it does, I still think there's going to be plenty enough support because of the government buying so many mortgage-backed securities that we're going to see these great rates for at least the first quarter of 2009. So that's really positive for us that are refinancing and purchasing homes, and especially for those of you that are purchasing investment properties right now. Those cash flow all day with how low rates are on those with a decent down payment. So that's exciting news. Rates have improved today to the point where we're almost back to December 17th, which was an all-time high, where we're easily in the 4.75 range, with APR in the fours, even upper fours, around 4.92. So we're back to that point, and if we can even surpass that, we're talking rates that are just unbelievable and never heard of. I mean, can you imagine having a 30-year fixed at 4.625? That's just unheard of. Those are ARM type pricings we've seen in the past. So that's great news. Also, what's really encouraging is the Dow is actually in the black, only about 30 points. But the numbers yesterday that came out from the automakers, even the foreign automakers like Toyota and Nissan, Chrysler was down 51% in December for auto sales. I mean, how devastating is that? And most other ones came in at least around 30% decline in sales. So that number was staggering, and the Dow is still improving. So I think there's just so much good hype right now going on with President-elect Obama about to be sworn in, and his stimulus package and tax cut package was actually released to the media yesterday. It's a $755 billion tax cut package, as well as infrastructure investment to get the economy going in energy and different related areas. So there's just this buzz right now that I think a lot of it's emotion still, which so much of emotion is what got us here, but I think it's also going to get us out of here is people's emotions, because a lot of times there's not technical factors that move the market. It's more just emotion based on reports that come out and people's consumer confidence and things like that. So other than that, the Feds are like a kid in a candy store right now with a pocket full of money. They have money to spend on mortgage-backed securities, and they're doing it right now today. So obviously with that big a jump, we're up 88 basis points today. That's almost nearly 100 basis points, which is 1% in fee on a mortgage. So to get a rate yesterday that you could get today, it's going to cost you 1% less. So if your loan's $300,000, it costs you $3,000 less today. Again, almost back to the pricing we saw on December 17th, and hopefully we'll close even better. So this will be the best day in the history of mortgage rates. On that note, I think that's about it. Like I said, oil is improving just slightly, so that's good news. That's been a pressure lately, and that's just nothing but good news today. So I hope you enjoyed the update. Please call us if you have any questions. If you have friends or family that you care about, you'd like us to help serve, I'd love to do that for you as well. So just give us a call if you have a chance, and be blessed.